What's going on, traders? I was able to trade this morning, so we're going to talk about it. This morning I was in at 9:38 on the dot and then out at 9:57.39, so almost a 20-minute trade, which was excruciatingly long. Normally I like my trades in this strategy to be between 5 and 10 minutes max, but instead this one was 20, but there was no reason to get out of the position for a loss, and I'll explain that when we look at the chart. But I bought two SPY calls expiring on Wednesday, playing the 287 strike price. I was in at 138 and out at 143, so just a 5-cent scalp there was what I was looking for. And as we look at the chart, I'll explain why the trade was so long. And down here, I just want to show you the canceled orders. I was trying to add to the position, get up to 5 contracts in total if the prices wanted to flush down again and give me, again, that second entry there to add 3 calls to the position. But with that, we'll look at the chart. So here is the SPY 2-minute that I was watching this morning. We broke pre-market support, flushed downwards, and my first entry was around here, right around the 50-cent mark, 287.55-ish. I was in, as you saw, at 9:38 on the dot, so right at the open of this candle here. Prices started to bounce a little bit. However, the price didn't make a significant enough move for me to get out for my 5 cents. So instead, as we started to make another leg down, I thought I would be comfortable with an entry point down here around 287.20-ish. If the prices wanted to get all the way down there in the next couple of candles, I was willing to add to the position there, those 3 calls, and take my 5 cents after I would average down there. But the price never did. You can see we had a bit of a double bottom here on the 2-minute. An equal bottom there, and then the prices started to move higher, so I was comfortable in my position, thinking the prices are continuing higher. Here you can see we started to go down during this candle, but the prices never breached the lows of these candles, so I was comfortable still holding, and from there obviously prices got bought back up, and I was out for my 5 cents somewhere in the top of this candle here at 9:57.39 or whatever it was. So obviously hindsight says if I had held throughout the day, yeah, I could have made out big. SPY did just grind it up all afternoon, closing almost near high of day. So hindsight says, yeah, that would have been a good idea, but being disciplined is what trading is all about. So sticking to the plan here, taking my 5 cents where I wanted to, would have added if I could have, and it is what it is. I took what I could get from the market, and I was on with my day. Just for the sake of it, we're going to look at the contract, what the contract looked like. So the 287 call here. So this is what the chart of the options contract itself looked like. I was in somewhere around here. I had to hold through a little bit of pain, but the underlying chart, again, is what you should be trading based off of. So it made sense to hold on, and obviously prices just continued to rip. And the high of the day here looks like it's right around $2.12. So could have made just about $100 per contract there had I held both of them all day. But again, that is being very undisciplined. Anything could have happened, and that would have, if you do that all the time, you're bound to get burnt more than you make out. So glad I stuck to the plan. Again, hope you could learn something from this video. If you did, leave it a thumbs up. If you have any questions or comments, let me know down below. And as always, subscribe for more of this content.